Good afternoon, everybody. Joe Lucey here with this week's Market Huddle. November 12th here, just a couple weeks ago, Social Security Administration announced their updates to Social Security for next year. So this will probably be a shorter Market Huddle than some in the past. We're just going to kind of run through some numbers. I'll be available for any kind of questions. And if you have questions about your Social Security following this, as always, feel free to, we'll give everybody an opportunity to schedule some time to review some things. So anyways, November 12th, Social Security Administration updated what the changes up to Social Security and Medicare are going to be here for 2022. Now, the increase that is, they base it on an increase in what's called the CPIW, and it goes from the third quarter of last year to the third quarter of this year. So some of the numbers we're going to see here, we'll spend a little bit of time talking about maybe how I actually think that the Social Security increase is a little light based on what it should have been potentially based on what we're seeing right now with inflation. So anyways, this is the normal disclaimer. Keep in mind, I'm not a part of the Social Security Administration. I don't work for the federal government. Any kind of tax or estate legal type discussions we're going to be having here today, keep in mind that you may want to talk to other professionals to get additional information. So anyways, with that said, here's the good news. The good news is that 5.9% increase is what they're going to start seeing in our Social Security benefit checks starting next year. Now, if you are paying attention to inflation, we are seeing inflation north of 6%. In fact, later numbers or most recent numbers show pushing almost 7. But so as I was saying a few minutes ago, it would have been nice to see this a little higher, but it is what the number is. So the good news is that everybody that's receiving Social Security benefits will see a 5.9% increase in the cost of living adjustments next year. And those that are not currently receiving Social Security, you also get this increase. So your numbers that you would be receiving, let's say you were going to start Social Security in June of next year or maybe 3 years from now, you will also get this cost of living adjustment to the amount that you would get at full retirement age. And then, of course, getting discounted from there. If you have questions on how that all works, we've spent a lot of time, and I see a lot of names on here that we've run Social Security analysis for. We consider it the foundation of every retirement plan. It's what I call mailbox money. It's money that hits the checkbook regardless of what's going on in Wall Street. The more mailbox income we have, closer to meeting our lifestyle needs, the less we have to worry about the market performance to make sure that our retirements are going to be secure and successful. So anyways, if you'd like to make sure that if you have not had a Social Security analysis run by our office and you or your spouse are not currently collecting Social Security, I encourage you to schedule some time. Let's run that for you so you can make an informed decision around Social Security. So what's the 5.9% increase mean? Well, if we look at the numbers, and these are from the Social Security Administration, the average retired worker right now is receiving $1,657 per month, or they will be receiving, and what that means is that they would get an increase of about $92 a month. The average retired couple is getting $2,700 in benefits, so just north of $30,000. They would receive an increase of $154. I'll tell you that most of our clients, most of the families that are working with secured retirement, are probably receiving numbers from their Social Security benefits higher than this. Some of that is just because most of our clients are planning their Social Security around the rest of their retirement planning. So it's not just about the wealth accumulation, but how do I take my money back? How do I make it last a lifetime? And in coordinating Social Security benefits between a husband and a wife, if you're married, or even just the decisions if you're single or taking advantage of any of the other benefits that are out there, if you're widower, divorced, and what have you, can make a big difference to these numbers. So most of our clients are seeing numbers north of these. But for the average retiree, we're talking about almost $100 a month to maybe $150 married couple, again, many of you are going to see benefits probably increasing by about $200 a month. So that's all good news, and that's something that we should be excited about. The next number is not such good news. While the Social Security benefits are going to increase by almost 6%, our Medicare is going up unprecedentedly, almost 15%, 14.5% increase in our Medicare numbers. Now, keep in mind that Medicare and the decisions you've made around your Medicare decisions is something you should be reviewing. In fact, up until December 7th, so we got about a week left, a little over a week, you can make changes to your Medicare plans. It's what they call the open enrollment. It's been going on here since October 15th. If you have not reviewed your Medicare plans, I encourage you to do so. We don't do that currently here at Secured Retirement. We can probably share with you a name or two that we know that could, or go back to who it was that helped you elect that in the first place. They should be able to do that, and I encourage you to do that because these plans do change regularly. If there's been a change in residency, you're going to definitely want to make sure that you're looking at that. Big push lately for Medicare Advantage plans, which kind of bring it back to a more traditional. You won't need the Medigap insurance if you do that. There's some other benefits. Make sure you're asking the right questions around this as you do it. But if you wait past December 7th and you're currently on Medicare, you likely are going to be on that plan for another year. Expect that a lot of the increases in Social Security, because most of our clients are paying their Medicare out of their Social Security benefits. A lot of that $90 to $100 a month that you're going to receive in additional benefits, well, you're going to lose some of it due to Medicare. The other thing is if you're a higher earner, and we talk a lot about IRMA, income related to Medicare adjustment amounts. When we have clients that are doing some planning, sometimes it's moving money around, taking money that's never been taxed or tax deferred in an IRA, converting that into a Roth. Our income gets higher. Maybe it's just a situation that you have a capital gain, that you're selling some real estate. Maybe your income benefits or your pension's high enough that you're pushing yourself into this. Sometimes it's the additional required distributions that you have to take out. You might see higher, you might start to hit these numbers where all of a sudden, for the exact same benefit as what everybody else is getting for their Medicare, you're going to see an increase in what you have to pay. Keep in mind, if you're a worker and maybe you get a letter as you file for Medicare, as you retire, there are some ways that you can get this offset. There's actually 8 different ways you can offset if you're finding yourself in the higher thresholds here where you're paying extra Medicare premiums. One of those is that you either reduce working. Another one is that you stop working altogether. It's called an HSA 40. I'm sorry, it's an SSA 44 form. It's a form that you should be able to complete with a tax preparer and submit to the Social Security Administration. So let's say that you find yourself in this level here where you're maybe you have $250,000 of adjusted gross income because you were working. You're going to retire on less than $150,000 a year or $180,000. Your Medicare benefits should not be going up as long as you file this Social Security Administration Form 44, an SSA 44 form. Again, after the call here today, if you would like to see if you're eligible for filing that, we can probably be of assistance there. So anyways, the Social Security, the Medicare Part B and Part D premiums go up if you have higher income. Single families, if you have an income adjusted gross income, north of $91,000, or a married couple north of $182,000, you go from paying $170 a month. Last year it was $148. With the new increase in Medicare benefits or premiums, it's going to go to about $170 a month. If you're above that level, let me grab my notes here, you will see an increase it'll go to $2,857. So it goes up by a little bit over $800 a month. So about $70 when you start hitting that first threshold. And oh, here's my notes. And so it goes from 170. This first threshold is 238. $340 a month into this third level here, all the way up to $578 a month when you hit this other level. That doesn't include the Medicare Part D for the drugs. You can see that that can go up an additional $80 a month or so. So between if you're in this high level here, it costs you about $100 or $650, $660 more for the exact same health insurance as somebody else. Really kind of comes to the importance of making sure that we're doing tax planning. When Medicare decides who has to pay more Medicare premiums than somebody else, all they're doing is they're looking at the 1040. On that 1040, they're going to look at the taxable income. One way to avoid higher income but yet maintain a higher lifestyle would be to take some of that money that is going to be forced to come out as a required distribution down the road, maybe being proactive, moving it towards something that's going to be tax-free. Think Roth IRA, think LIRP, life insurance retirement plans. Municipal bonds don't help because of the modified adjusted gross income here, this modified AGI. They add back municipal bond interest. So municipal bonds isn't a great way to do that. However, life insurance and Roth IRAs are both great ways to do that. Again, if you have questions or you want to know how that could fit into your retirement planning, give us a call. Let's review things. In fact, we're down to a little over 30 days left of the year. Take out a few days for some holidays and what have you. It's going to go fast. Last week was a good reminder that there's a lot of things that can create disturbance in the markets. You know, as if you weren't paying attention last Friday, the markets were down a little over 900 points. Why? Well, there's some concern about a new coronavirus coming out. So now is a great time. We got 30 days to do any kind of planning that has to be done before calendar year end. So any kind of moving money from a IRA to a Roth IRA, a Roth conversion has to generally be done before December 31st. In fact, I would recommend that we try to do that even sooner than that. If we wait till the last day of the month, there's no guarantee we can get it done. It's not really on our end. We're going to do everything we can, but it could be where the money is at. If it's at your existing 401k, or if it's at a TD Ameritrade or Allianz or any of the other insurance carriers we work with, maybe you've got your accounts with us at Fidelity. If it's at any of these, they're all going to be backed up, and there's a whole lot of money moving around this time of year. So I encourage you, if you want to look at moving money around, let's do that. Let's keep in mind some of these hidden taxes like the Medicare Part B and D, income related to Medicare adjustment amounts, where you have too high an income, it costs you additional hidden taxes, you know, extra Medicare premiums. That's really what it is a hidden tax. So quick little recap here. Good news, 5.9% increase in your Social Security benefits. Even if you aren't taking benefits, you will also get that cost of living adjustment to the amount when you start. You get that plus that, you know, potentially that 8% you get. And the bad news is that a lot of that, not all of it, but a lot of it's going to be absorbed because of higher Medicare premiums for many of you. Kurt, what changes to Social Security do you see changing in the next few years due to funding dropping? You know, Kurt, that's a great question. I don't have a crystal ball, so anything I'm about to say is just kind of speculation on my part. But most of you are already aware that up to 85% of our Social Security income can be taxed. Good news is 15%, even if you're, Warren Buffett, 15% of your Social Security income is completely tax-free today. I see changes to that. Let's go back to this other slide. I can see a day where all of a sudden somebody's sitting there with an adjusted gross income, and probably I would go back to the numbers I'm looking at here. Single people above 90,000, married couples above 182. Pretty good chance that we might see another bracket where all of a sudden you start paying 100% of the Social Security income would be taxed. I see additional Medicare increases. Medicare is already broke, where there's a lot of speculation that Social Security is going to run out of funds here in 10 or 12 years. Medicare is already has to be supported by additional funding. So Medicare extra premiums here, it's really important to start looking at taxes so that you can try to avoid some of this. I also see that the current workers, right now, little over 7% of a employee's income goes to FICA. Remember that first job, you got that check, you thought you were going to be making a whopping $3 an hour or something. You only netted out $1.50 because some of it went to this person called FICA. Well, FICA is the money that goes towards Medicare and what have you. And payroll taxes, 7% is going to go probably higher. If they are looking to make Social Security more solvent, one of the easiest ways they can do that would be to increase by both the employer and the employee. Another 0.9% is what the numbers I saw. Maybe 1% increase in what comes out of a paycheck to help support Social Security. I also think that they're going to be pushing that full retirement age. Right now, the oldest full retirement age is 67. That's going to start pushing up. I could see some changes there. I would think that Medicare would probably also get pushed off, but actually it seems that there's a directional change to maybe reducing, allowing somebody to start Medicare maybe as early as age 60 is some things that they've talked about. Who knows what's going to happen there, but either way, the best defense to the changes in Social Security really comes down to how they penalize us when we have these higher incomes. Let's find ways to reduce taxes. Most families, high risk number one, they want to maintain their lifestyle, have as much mailbox income as possible, and Social Security is a huge piece of that. Number two, let's reduce your tax burden. That's my jam. That's what I really enjoy doing most, is helping families reduce taxes. And then, of course, we always want to help families grow their wealth, but never at the compromise of those two other areas, the income planning and tax planning we do. Jim, I retired midway through 2020, also sold some property that have pushed you into a higher Medicare premium bracket. Will I be notified and charged the additional fee? And how can I confirm if it impacts me? The answer is yes. You won't see anything here right now in 2020. You will. They're going to go to the tax return. So you retired halfway through 2020. And when did you sell the property, Jim? If you sold it in 2020, you'll get a love letter from Medicare here somewhere after January, notifying you that you're going to pay higher Medicare premiums. If you sold that property in 2021, you won't see that until 2023. But you're going to want to know, Jim, depending on that property, if it was income producing, it's possible that you can make sure that you avoid paying the higher premiums. If your wages have come down because you retired, and that can bring you below this $180,000 threshold, that might be a way. Again, that SSA 44 form is going to be a form you're going to want to know about, Jim, and we'll make sure that we help you locate that, and you're going to want to be ready for that. So I'm guessing you're going to see that letter sometime here in January, Jim, and just know that as soon as you do, you're going to want to get on the phone and have a conversation, sit on hold for a while, and then have a conversation, maybe even make that appointment with the Social Security Administration, but come in armed with this SSA 44 form. So any other questions here? I got a letter Friday telling you the increase. So Arlen's already got his letter. Actually, Jim, I didn't want to be too committal that you were going to see it here in December. But yeah, it sounds like those letters have already started to go out. I think they put those together here right shortly after the November 12th announcement. And I don't know if they go by alphabet or social security number or something as they send them out, or maybe it's one big push. But yeah, Jim, I think there's a very good chance you'll see that. Just Google SSA 44. You might want to put a hyphen between the A and the 44, and you'll see the form I'm talking about. There's 8 reasons on there where you might be able to be eligible to reduce your Medicare premiums. You're going to want to see if any of those will fit in your situation. Arlen, we can go over your letter too and see if there's a way that we can help you with that. So if I don't have any other questions here in the next 30 seconds, use this as a resource. Now is a great time. We know what the numbers are going to be now for Social Security. Everybody can, we can calculate that number. You know, a lot of families, you know, everybody gets worried about paying these extra Medicare premiums, but keep in mind that you know, if you hit this first Medicare premium, you know, you're talking about $800 here, another 150 potentially here. That's really a big jump, by the way, this 149. But you know, so it's going to cost you an extra $1,000 per person on Medicare. So a married couple will have 2 of you. Cost you $2,400 a year, but let's weigh that against what the lifetime amount of taxes that will be taken out of required distributions or just regular withdrawals from the IRA. Use this as a resource. Let's figure out ways that we can help you put yourself, be proactive about your tax planning, and put you in the best situation possible. Here's this. If you'd like to schedule some time with us, I know many of you have already done this, but it's pretty easy. You just click on it and it'll automatically find a time that works, and we can schedule that and either have a quick phone call. We might want to just schedule a full review. If that's the case, just give us a call here, 952-460-3260, and let's schedule some time. That's open to everybody, whether you're a client or not. Want to be a resource, you're welcome, Jim. And with that said, I hope everybody's full of turkey. In fact, I hate to say it, I love turkey. Some people don't, but I really do like turkey. But I've had my share here, so I'm going to have to avoid some fowl, some turkey, and probably chicken too for a couple weeks. But that'll pass, and by Christmas I'll be ready for another round at the turkey table with a large group of animals. It was great this year. We had 14 over at the house, and it quite a big difference over last year. So I hope everybody had a great Thanksgiving. With that said, we'll go ahead and end this here for today. And again, don't be hesitant to give us a shout out and give us a call. Happy to answer those questions. And Jim will make sure that you get your answer on that form as well. Everybody else, have a great rest of your day and a great week. Have a good day. Bye-bye.